In fact, we were looking at an investment in a business I won't reveal exactly, but in one of our companies, and there was a project that's on the fence, frankly. And all of a sudden, the return to shareholders of that investment gets materially better, and it went from the maybe column or someday column to how fast can we do it column.
Based on a tax rate?
On a tax rate when you put it into return on invested capital. So if you're going to spend another $1 billion on a project that is discretionary, not talking about a truck wearing out and you need to buy a new truck. I'm talking about a whole new business. In our case, it involved a theme park area. So it's not in the television space, but we want to make that investment now.
M&A regulation out of this administration, is it as bewildering to you as it is to some others?
I think we'll get clarity at some point here, but it's not exactly clear yet what the rules of the road are. And I think as you see with investment and as you see with tax cuts and other regulations, most business leaders need sort of certainty, and then they can explain it to their investors what the strategy is. Uncertainty hurts investment. So the more there's clarity, the better it will be.
You mentioned tax cuts earlier. You were pretty quick in announcing the bonuses out of the legislation. How did you get to the number, the $1,000? Why so soon? And how do people separate that versus what you might have done otherwise?
It's hard to speculate what you might have done otherwise. We've been talking about it for a couple of weeks as it looked likely that there was going to be tax reform officially passed. We had been talking at Business Roundtable and other organizations about sending a message to our existing employees and how much we appreciated them. Our second goal was to say we're going to invest in the business. In the case that same day, we announced we're going to spend at least $50 billion over the next 5 years in capital. And that's the certainty of what these tax reform allows companies to do. And then thirdly, a couple weeks later in earnings, we were able to have healthy growth in our investments, but also in our return of capital to shareholders. So it's a balance. It was the holiday season, and we know $1,000 to 150,000 people will make a nice and important contribution. And the response from our employees, no surprise, but nonetheless very much appreciated, has been overwhelming for me personally, and I think for a number of our leaders.
A couple of thoughts on Netflix. One, the degree to which they're forcing others to spend on content aggressively. And two, it's funny, we've talked to a couple artists, content creators in the past few weeks who say Netflix is great, they're hands off, but I feel like my product gets lost in the wave of content they are pushing out.
Let me start by saying they're an amazing company. They've created a worldwide business, and my hat's off to them. They do have a different model where at the moment their free cash is negative, but they're adding customers. We have a nice relationship now, and I'm proud that the best way to get Netflix is using your X1 from Comcast. And more people use Netflix than almost any other service. This is a crowded world, and that's why, harking back to Olympics for a moment, one of the things we can do as a company that other companies can't do is use all these different platforms to take a piece of content or a series of content such as an Olympics, and I don't think there's a better company that can deliver that content in so many ways.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.